Shares of Soundhound are down 18% and have fallen 39% from their peak just a couple of weeks ago, but this is still one of the top stocks over the past 3 or 4 months. So is this pullback a buying opportunity for Soundhound, or is this just a preview of what's to come over the next few months as a potential bubble bursts in artificial intelligence applications like Soundhound? That's what I'm going to dig into. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First of all, let's take a look at what Soundhound stock has done over the past few months. And I'm going to start with just the percentage change in the stock over the past 3 months. You can see that the stock is still up 218% over the past 3 months. But let's look at those drawdown numbers. And drawdowns is just simply how far has a stock fallen from its peak. And that's where you can see here, just over the past few days, the shares are down 39%. So what in the world is going on? The thing that happened this week is that CES is happening right now. NVIDIA founder and CEO Jensen Huang gave a presentation that he kind of poured cold water on a lot of these speculative stocks, in particular quantum computing stocks. But the sell-off in that market has actually spilled over to a lot of other sort of related companies like Soundhound that have benefited from speculation that all of these businesses were going to be growing exponentially in the future. So this is a typical case of a stock likely getting ahead of itself. And what I mean by that is that the valuation has just gotten crazy with Soundhound. This is a look at the company's price to sales ratio. We can't look at the price to earnings multiple because there is no earnings to compare the price to. So the price to sales multiple is the best proxy for valuation. You can see that even after the recent pullback is nearly 100. Now, the stock is typically traded for right around 10 times sales. That alone is very expensive, but things have gotten kind of out of control. And the performance of the company doesn't really back up that kind of valuation. You can see that with the revenue and net income on this chart. These are all trailing 12-month numbers. So the compound annual growth rate since 2021, really solid, 52%. That's a really great growth rate. But how long does a company have to grow at 52% to live up to a $6.6 billion valuation when you've generated just $67 million in revenue over the past year? And Soundhound, remember, has not proven that it can be profitable. Net loss is $110 million. So basically losing $2 for every dollar gained in revenue. Now, the theory is that this is going to be an AI application that's going to be able to grow exponentially as it's adopted by more and more customers. So let's look at one of the recent announcements of a product that they're getting into lucid vehicles and could potentially go into more vehicles and see if it makes sense for this to be a much, much bigger product. And this is what I'm talking about. They announced that Soundhound AI is debuting their first ever in-vehicle voice assistant with on-the-go food ordering. That was on January 7th, and they're going to debut that at CES. They also announced that some of their integrated generative AI is going into lucid vehicles. So this is really a market that they're trying to move into more. So you have a lot of restaurants already using Soundhound. Now can you integrate into vehicles and kind of tie those two things together? So what exactly does this look like? This is the actual press release from Soundhound, and this was an example query. Show me the closest mod pizza restaurants. I'd like to order a pizza for pickup. Navigate home. I'd like to order a burrito for the most convenient location on the way. Take me to a hotel and find some Asian food to order for pickup within 5 minutes of my hotel. All these applications sound really great, and it sounds really great to be able to do this within your car with just voice controls. But here's the challenge, especially in generative AI. What Soundhound looks like it's trying to build is a platform. They can build the technology to make this happen, but they have to get this technology into vehicles, and then they also have to have the same technology in restaurants, whether that's through the point of sale system or integrated somehow into the restaurant itself. What we're seeing with this food ordering in a car is a feature. It is not really a product or a platform yet. And I think that's really the distinction that we need to look at, because features are great, but what you want to invest in is companies that have products and platforms to build on. Who's going to be the disruptive force in these kind of products? I don't think it's going to be Soundhound. It's going to be somebody who has a platform to build on top of, and there are natural answers to that. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. If you think about the leaders in artificial intelligence today, the companies that are making the best models, that have the best distribution, it's not a company like Soundhound. It is a company like Google or Alphabet. This is just one example of one of their use cases, but you can imagine a generative AI model that is generalizable, meaning it can do a lot of different things. If you're plugged into these kind of companies already, it's going to be much easier for you to plug into a platform like Google and Android than it is to plug into Soundhound and change everything else around it. So Wendy's, for example, is using generative AI to reinvent the drive-thru. This is from 2023. There's also things like Order with Google. So a couple of things that I think investors need to think about when looking at a stock like Soundhound is, can the feature that they're building be generalizable by a company that has a bigger AI tool or a bigger platform with which to distribute their own products? And I think that's clearly the case with Soundhound's products. Great that they can have audio ordering and integrate that into point of sale systems. But if you're now talking about tying into cars and maps, the better integration would be with companies like Apple and Android, who are actually in the car already and who restaurants are already interacting with. Apple and Google already have those maps. They already have all of that data. They already have all the information about what's on the menu. So it's going to be much easier for those big companies to build features to move into those markets than it is for those feature companies like Soundhound to become a platform. And I think that's the real challenge. And until the company shows that it can have growing revenue and grow profitably, that's really the key. This is a stock that I would absolutely stay away from. The run in the stock recently has been speculative, based on the idea that artificial intelligence applications are going to be the next point of value. I don't necessarily disagree with that, but I think a feature like this that has a relatively small market, is very niche, and is likely better distributed by bigger companies with more capabilities. That's going to be the real challenge for Soundhound. Now, I could be wrong, and the way for the company to prove me wrong is to make a profit. And until we see that with Soundhound, this is a stock I'm going to be staying out of. That's why the stock is down so much just over the past week or so. And I think the fall in the stock is going to continue as the speculation and hype around Soundhound and other AI cloud computing stocks falls by the wayside in the market. Shares were trading at about $5 per share before this speculative pop, before this speculation started. Wouldn't be surprised if they go that much lower, and that would still likely overvalue the company at about a $3 billion market cap. Now, do you think I'm wrong? Let me know in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.